From rising oil prices and conflict in the Middle East to inflation, interest rates, and the road to the next election, there is a lot shaping the economic outlook for retailers right now. In this episode, we'll unpack what those forces could mean for consumer spending over the coming year. Kia ora, I'm Carolyn Young, Chief Executive of Retail NZ, and today I am joined again by Satish Ranchhod, who is the Senior Economist at Westpac. Kia ora, Satish, and welcome. It's great to see you again.
Great to talk.
So, look, tell us how rising oil prices and that ongoing conflict in the Middle East are affecting retailers here in New Zealand. What is it that you're seeing at your end?
We're seeing some pretty significant effects from the big increase we've seen in oil prices since late February. And it's coming through a number of different channels that are affecting our retail sector. I mean, the biggest impact is definitely come through in terms of higher prices directly for consumers and businesses. And for consumers, it means that when we fill up the tank, we're probably spending about 20% more than we used to, and you're probably getting about 5 to 10% less each time you fill up. And that's a pretty big impact on households. And that's also meant that they've got less to spend in other areas, those nice to haves. And one area that's taken a particularly big knock is spending on things like travel. Households are a lot more concerned about the cost there, but also nervous about the global environment. But even in areas outside of travel, those high fuel costs are having an impact. If I think about a sector like groceries, where spending is usually pretty resilient, what we're hearing is those cost of living concerns are seeing people move down the value chain. They're focusing more on the essentials, shifting away from those nice to haves. And that's directly for consumers. But for retailers, they're not just seeing that impact on demand, they're dealing with a range of other impacts. They're seeing higher transport costs for many goods, costs are rising. And I don't think we've seen the full impact yet. I think it's going to take a while for those higher fuel costs to ripple through value chains here and abroad. And even if we get a peaceful resolution to the conflict in the Middle East soon, it'll take a while for those effects to wash out. So it does mean some ongoing pressure on operating costs for some time. Combine that with potentially some downside risks for demand, it's making a pretty tough environment for a lot of retailers. Many firms have told us margins are being squeezed. So, still quite a challenging time for the past few months.
Yeah, look, definitely what we're hearing is a couple of things to back that up. Certainly, we're seeing a lot more consumers turning to own brand. So across the sector, they're buying a lot more of own brand. You kind of know exactly what you're getting. You're getting really good value for money, reliable products. So, people buying in terms of those spaces. And we're seeing retailers have been telling us for, a few months now that they've seen increases in the price of rubbish collection or recycling collection. So, all of those ancillary things that are in the business, which is, as you say, squeezing margin.
Exactly. And I think we are going to see those impacts of fuel price rises rippling through the economy for some time because fuel underpins transport costs and so many other inputs. One area that I'm particularly concerned about, especially for consumers, is food prices. Because not only are those transport costs rising, fertilizer costs are rising here and abroad, and it'll take a while for that to work through supply chains. We could see that pain at the checkout for some time yet.
So that might be a good time. We're going to insert some slides this time. So we've got some
Yep.
graphs really to show you and demonstrate that stuff. I think maybe we look at graph one. We were talking about the spending in the 3 months to the May period. Did you want to cover that stuff off now, Satish?
Yeah, I mean, this is spending that we're seeing on our own cards from Westpac customers, and you can see the big swings that have occurred. Big uplift in that spending on fuel, but some softness coming through in other areas like travel. But under the surface, even in those areas where we're seeing resilience, areas like entertainment, hospitality, and even groceries, as you mentioned, people are focused much more on value for money in the face of those pressures, and they're moving down the value chain. And when we've talked to a lot of operators, especially in those discretionary spending areas, they're definitely telling us that those challenges are there in terms of getting shoppers into the stores and spending right now. So, really interesting time. We're seeing oil prices stabilize the last few weeks, but it's going to take a while before I think we see them coming down. So, pretty interesting environment for the next couple of months at least.
Yeah, absolutely. One of the things that I have been hearing is that, for the average consumer, so we're thinking, you and I and everybody else that's around, the average consumer is doing that. Those that are buying at the high end, though, are still purchasing. But what those retailers have told me is that they've got staff in store all day waiting for that one or two customers to come in and make a very large purchase. So, there are tensions both at the high end in terms of staffing, and, you've got people with not a lot to do for long parts of the day versus retailers trying to adjust who their customers actually are as they're changing, as people are moving through different scales. So I think it's a really interesting time.
Absolutely, yeah.
So what about the household consumption? Did you want to go through that a little bit and so we
Yeah.
can show what that looks like?
Exactly. I mean, I think one of the charts we've got there is what we're expecting to see for consumption spending through the remainder of this year. And if I think about nominal spending for a lot of our customers, we're still expecting to see some, average sort of growth rates, maybe a little bit on the low side for this year, about 3%, but it's not a great mix in terms of the volume price split. In terms of the volume of goods retailers are going to expect to be selling over the coming year, likely to see very limited growth there. It's really a cost story that's been pushing up prices, but it's also been pushing up the cost of goods, meaning that retail's margins aren't really seeing that growth. And I think that's going to be the story for most of this year. Now, going into next year, hopefully we're going to see that story turning around a bit when we eventually see some of those pressures coming off oil prices and maybe other cost of production. But I'm still a little bit cautious about just how strong or how fast the recovery is going to be. I mean, we're not just dealing with cost of living crisis and fuel, as we've been seeing it coming through in a range of different areas, but we've also got a few other factors going on. The labour market, soggy for some time,
Yes.
and when we've been talking to firms across the country, they're not shedding stuff, and most of them aren't shedding stuff like we saw in the last couple of years. But they're also cautious about taking anybody on at these uncertain times. In one area where I think there's certainly that halt coming through is in wage growth. I mean, it's a lot harder for workers to ask for major pay rises if you've got above average unemployment, a soft labour market. And that's really challenging because the other side of that, of course, is household incomes, cost of living crisis, and tough to push through those wage increases. It does sort of mean a bit of restraint in spending. So a really interesting environment there for a lot of different reasons. I think it'll be, from an overall perspective in New Zealand, probably still a pretty middling sort of performance this year, I think. One of the
Yeah.
areas that we're conscious of is it is quite mixed across the country. So I think one of the other charts we were going to show is just how things
South
are going across
Island,
the country, right?
right?
Yeah, it's
Where do you
very
want to be? You
different.
want to be down south right now.
South Island or in those regions that are linked to the rural sector. One of my
Yes.
colleagues is down at Field Days right now, and I was down south last week or a week before. The vibe is just so different if you're in our rural heartland compared to areas like Auckland and Wellington with strong commodity earnings, especially for dairy, but also products like meat or culture. It's just giving such a boost to incomes, spending, and confidence, especially in those regions. And yeah, when you walk through the streets of Christchurch right now, it's just such a different feeling from what you get in other regions. And that's boosting spending on and off the farm, importantly. So it's not just your on farm
Mm.
equipment, the retailers, hospital sectors are also seeing it. Their labour markets have also been a lot more resilient. So great picture there. I mean, people often talk to us about two-speed economies, saying it's really mixed, and I understand the concerns. It can be a bit uneven, but in my mind, it does mean that we've got a really strong sector of the economy that's helping us navigate some very rocky global waters right now. It's keeping the economy as a whole afloat. So some great news there. Of course, we'd love to see it more widespread, but still a good news story, I think, on that front.
It'll be really interesting to see, what the reporters out the back of Field Days after that's finished, because, and that's a time when farmers are going to be in the Waikato, they're going to be at Field Days, they'll be putting in orders. We've got this $4.2 billion Fonterra payout coming now. Farmers will be also that two-speed space, right? They're going to be thinking on one hand, they've got fertilizer costs going up that they're going to have to absorb, in the coming year. But on the other hand, they've got a good payout coming through, which they've probably got some capital expenditure and some other consumable expenditure that they've been holding back on until they get this payout. So I think it would be interesting to see.
Exactly. I think it is a degree of cautious optimism. Our farming clients, they are aware of some pretty significant cost increases, as you mentioned, but several years of good payouts, another one on the radar. Maybe they're not sort of being overly exuberant, but we are certainly seeing that they are spending up now. And that's a great news story for many of our regions, especially those down south.
Yeah, now look, interest rates is an interesting space, isn't it? We've got a new Reserve Bank governor, and it
Yeah.
started in December. They had a really interesting meeting last month where they decided to maintain the OCR where it was at, and it was divided 3-all. And the Reserve Bank
Okay.
governor had the deciding vote. So, really strong indicators of some changes ahead. But you're best placed to tell us about that.
Well, I think you summarized it really nicely there. It was a very close call. It's a tough trade-off for the Reserve Bank right now. They know they can't offset an increase in oil prices that's already occurred by hiking interest rates now. That's not what they're trying to do. But they are aware that we've had high inflation for a while. It's going much higher in the near term again. And we've had relatively low interest rates for the past couple of years. So they're aware that they need to move interest rates back up to levels that are a little more sustainable, that'll ensure that longer term inflation is going to get back at a more sustainable level. But they're conscious that comes with a lot of trade-offs. Higher interest rates now to offset that risk from inflation will be a drag on growth and employment. But the risks of high inflation, they can be really corrosive for an economy for a long time. And we saw that particularly through the last couple of years when we had those very high rates. So the Reserve Bank knows they're going to have to hike rates. They're cautious about how quickly. And I think that's why we saw that disagreement at this latest meeting. But I think over the remainder of this year, the direction for interest rates is going to be to the upside. That's going to be important for households and businesses. If I think about what helped support the economy in the last couple of years, reductions in interest rates were a really big part, and it took a while to flow through to households, especially with many of us on fixed rates.
Mm.
But I think that boost from lower interest rates, it's really starting to fade now. And going into the back part of this year will be higher interest rates. And if we're thinking about those other challenges that we've been facing, cost of living crisis, the soft labour market, it does weigh up to what is probably a challenging picture for a lot of households, especially in terms of discretionary spending. Now, hopefully, we will start to see oil prices eventually coming down well before the start of this end of this year, but it could take a while for that to flow through, and that'll be really important for the Reserve Bank. They're watching to see how long these pressures are going to persist, if businesses are going to really keep raising prices, because that's one of the big concerns I've got, and I think you've probably heard it when you've spoken to businesses. They've been dealing with a lot of pressure on cost and margins for an
Yeah.
extended period, and after a big shock after big shock, there's this risk that even when oil prices come down, people do start baking in slightly larger increases into their prices as they try to insulate themselves. On the other side, it's certainly understandable, but it could be pretty problematic for the Reserve Bank if that means that inflation's a bit high. So, a lot for them to balance out. They don't want to derail a recovery that's sort of, obviously had some challenges, but those inflation concerns are a really big one. Really interesting time for the new Reserve Bank governor and new decision-making process there as well. So there'll be a lot for us all to keep an eye on, and some very valid concerns, I think, on both sides of the argument. I'm sure you've heard it when you've been talking to retailers around the country. They're aware of those cost pressures,
Yeah.
aware of the downside risks from higher oil prices and interest rates as well, and a tough environment to navigate for a lot of us.
And look, it's obviously tough for consumers as well because we know we started the year really well. We had a positive January, February. March, things fell off a little bit. April was a bit flat. May has been down. I've had retailers tell me that May was quite good, and then the start of June has been really poor. So, it's just we're not getting consistency where retailers can feel they can build a platform that's strong and have some sense of like what's coming ahead. It feels like, you just don't know what's around the corner. So, it's that inability to plan and just reaction all the time that's been really tough, I think.
And we've heard that in a lot of sectors, not just retail. And in that sort of environment, retailers and other businesses, they're cautious about their own spending. So if it comes to taking on new staff members, the line that we've heard quite often is no hire, no fire. They don't want to cut staff right now, but they don't want to expand, especially if they're not sure how the environment's going to go. And they're also quite cautious about major capex in terms of expanding their footprints or investing in other assets. So I think that's definitely going to be a feature of the economy for this year. So particularly important for a lot of businesses who are not only in the household space, but those selling B2B, who will be thinking about, well, what are my customers going to be looking for?
Look, and I think, we're trying to jam a lot in, and we know the big thing on the horizon is the election. So 7th of November, we're talking, I don't know, what's that, 4 months away, give or take. We're recording this in the middle of June. So what are you thinking retailers should be keeping an eye out for ahead of that election?
I mean, elections in New Zealand are really pretty close run races now in the MMP environment, and it's looking like a very tight race based on current polling. We're still waiting to see what the policies are from different parties. I think there are going to be some big issues to unpack. That uncertainty about how the outcome is going to go is another factor that I think will weigh on decisions around hiring and capex. People are a little bit cautious there. The big areas that we're going to be watching aren't just going to be an issue for this election, though. They're something that we're going to have to think about for the next 3, 4 election cycles. I mean, they've come to the fore a lot in recent weeks. We've talked a lot about the pressure on government's finances, but also the demand for spending in a lot of areas. And it's a tough balancing act to strike, no matter what side of the aisle you're on. And it does mean that as a nation, we've got a lot of complex issues around the tax base, regulation, and what we want to spend on. And it's one that we'll have to deal with for some time. Complex issues, you're going to have pretty valid views on either side of the aisle. But I think it'll be a pretty close race going into November.
Yeah. Look, thank you, Satish. Now, one of the additional things we're just going to throw up on the slides now is there are some QR codes where you can actually link in and follow the work that Satish is doing and Westpac are doing. So don't forget to click on those to find out more and keep up to date with all of the economic information that's rolling. And lastly, what I will say, at the end of the video, you'll see a short disclaimer. Satish, in 2 sentences, what can you tell us about the disclaimer?
Our lawyers insisted that I show this. This is just a reminder to say that this is general advice. And if you're making economic decisions, this isn't intended as financial advice. Please consult somebody who understands your needs more constructively so you can have that discussion to make the right decision for your finances.
Perfect. So get in touch with us and we can put you in touch with the concierge service at Westpac. They're there to support retail, big and small. So don't forget to do that. But thank you so much for joining us today, Satish. It's always great to sit down and have a chat and hear about your insights and how the global conflict is influencing the New Zealand economy, what it means for retailers, what's happening with interest rates, what's happening with the election. So there's so much that we've covered today. We really appreciate you and Westpac sharing its latest thinking and forecast to help retailers plan ahead with confidence.
My pleasure. It's always great to talk, Caroline.
So look, I hope everyone enjoyed this episode. There's a lot we've jammed in here. Don't forget to visit www.westpac.co.nz to find out more. This was part of our Empowering Retail series, your go-to resource for short, actionable insights that will help elevate your business to the next level. Don't forget to subscribe, but until next time, ka kite anō. Bye for now.